So once again, welcome you all to the another section that is the IAS 10 event after reporting period or date. IAS 10 event after reporting period. I'll just provide a summary of it and we will zoom into question sections. So let's see. IAS 10 event after reporting period. Normally it move with IAS 37. So when I'm treating IAS 37, we might give some reference. Good. So take note of that. So let's start. IAS 7, sorry, 10. The 37 is the provisions which move in line with that of the IAS 10. So let's see. IAS 10, we call it events after reporting period. I like the term. So I've shortcut it, call it EARP. So what would be the name? EP, right? So EP, event after reporting period. Okay. Event after reporting period. Or you can also call it event after reporting date. So you can also make it date. So event after reporting, they then do what? EARD. Ed. Okay, so that is it. Let's quickly zoom into it. Within some few minutes, we'll look at it. Now, if you pick every standard, you should know the scope, the objective, like the 5 items that we listed when we started with the IS2. The same thing applies here. Good. Just like here, I'll move straight forward. Good. I'll move straight forward. The objective of IAS 10, in fact, objective of every standard is to prescribe the correct accounting treatment of that standard, the name. So the objective of IAS 10 is to prescribe the correct accounting treatment of event after reporting period. You are done. What is the scope? It covers all events after the reporting period. After the reporting period, but before the financial statement is being published. That is all. Now let's start the actual game. So in summary, before we start solving the question, let's just provide a summary of this standard. It's a very short standard, but highly important. Very short, but highly important. So I normally use normal line. So let's start the game. Let's assume that our financial year starts at January. Let's say 2019 financial statement. We start at January. Where do you think it will end? Where do you think the financial year will end if we start at January? Probably December. Our financial year ends at December. Good. So December, that's the end of the financial year. So 2019, I'm writing it here. Now the question is this: what happened on the ending date? Why are they going to prepare the financial statement? When exactly will the company prepares the financial statement? When exactly will the company prepares the financial statement? 31st December. Perfect. The last day of the financial year. So 31st December. So here we call it preparation date. Preparation the financial statement must be prepared exactly your year ends. Okay, now let's see what happened. Now, where do you think, when exactly would they publish this financial statement? Is it that just after preparation, they circulate it the next day? When exactly? Now, you have up to 3 months or up to the end of the next quarter. The previous year financial statement must be published. So 3 months after the preparation, within 3 months after preparation, you have to publish your financial statement. So let's count. So 3 months. So January 2020, February, and March. So within this, by the end of March, you have to publish your financial statement. That is it. So let's say March up to March ending, you publish your financial statement. You can even publish it earlier. Let's say February. Can we publish it in February? Now, so here we call it authorized or publish. Authorized. So here will be authorized. Authorized or issued or published. Good. At this date, that's where they will issue or publish a financial statement. Now the question is, so what do you think will happen? So any transaction which will occur after the reporting period, so after 31st December, so let's say from January going, so any transaction which occur between these two dates, that is the event after reporting period. So let's call it event after reporting period. So who can define event after reporting period for us? The standard define event after reporting period as this. As both favorable and unfavorable event. Yes, good things and bad things, all of them happen after the year end. Check 2019. Most countries, after December going, and then they experience the COVID, right? Thank you. So we say bad or good. The same COVID bringing bad news to some organization, it brought good news to some of the industry like Zoom and some of the labs or chemical manufacturers. Okay, so that is it. So we are saying that events after reporting period, they are both favorable and unfavorable events which occur or will take place between the date at which the financial statement is being prepared and the date at which it's being authorized or issued or published. That is all. So that is the definition for event after the reporting period. So we are saying that event after reporting period are those events, favorable and unfavorable, that occur between the end of the reporting period. So that occur between the end of the reporting period and the date when the financial statements are authorized for issue. That is all. So that is the event after the reporting period. That's all, we are done. We just have to know the types and how we treat them. That is all. If you know the types, that's all. So now let's go to the types of event after reporting period. The types of event after reporting period. So there are basically two types. Okay, there's a question here. Let me pick this question. Now, just take note that two conditions must exist before we can have events after reporting period because there are two dates. Number one, the event must occur after the end of the reporting period. That's point number one. Number two, that the same transaction must also occur before they publish the financial statement. So please, events After March going, after they publish the financial statement, please, this one is not event after reporting period. No, this is not event after reporting period. From here going, not. Take note. So between. So if we have the financial statement prepared, we've not published it, we are yet to, then event after reporting period. There are two types. Let's just look at the types. And then all what you have to know is you have to know the specific examples stated in the standards, because they are the one that your examiner will just move around it and present it to you. That is all. So I'll try as much as possible to list all the possible examples. And when I'm done, I will go through the exam past question for you to see that it's the same examples in the standard, which the examiners have just put together to come and worry us. Good. So let's start again. So the types of events after reporting period, there are two types. Number one, adjusting events. So let's put it down. I don't want to fill my diagram. Adjusted events. So type number one. Type one, we have adjusting events. Number two, as usual, if you have adjusting, then you should also have what? Non-adjusting events. So there are only two, adjusting and non-adjusting events. So when you pick this, it is your duty to know, number one, what constitutes adjusting events. Number two, what is the accounting treatment? That is all. And examples. My examples, so okay. Let's start again. Adjusting events. Now let me explain it first. The event will occur here, but there will be some indication or some evidence. It will provide evidence of its existence before the reporting date or before the year end. Although the transaction will occur here, but there will be some evidence that it exists before the year end. Yes. It's like, let's say this. Oh, the transaction exists, but nobody can see it. It exists, nobody. But right after the year end, yes. Now everybody. Now that's okay. That's a mere example. And let's come or bring it into accounting or financial reporting. So the transaction will occur after the reporting period, but it will provide evidence of its existence before the year end. That is the adjusted events. Good. So here, there are those events that provide evidence of conditions that existed at the end of the reporting period. That is all. So let me write a short information here. I just want to write something. Okay, so let me clean and then put it here because I don't want to clean the diagram, but I have to put something small. Tell the examiner that adjusting events, they are what? They are events after the reporting period. That's the event after reporting period. That's the event after the reporting period. That's what? That provide evidence. Wow, I like that term. That provide. So there are events after reporting that provide evidence. Evidence of what? Conditions. Conditions that exist. Evidence of conditions that existed at the end of the reporting period. That's what existed at the end of the reporting period. At the end of the reporting period. No shortcut today, I'm so full stop. That is the IAS 8 paragraph 3A. You can see this one, paragraph 3A. In paragraph 3A. So we are done. So we are saying that there's an evidence that no, this transaction exists before the year end. Okay. So let's see. Now, what is the accounting treatment? Then we go to the examples. Then I'll just list the specific examples that when you see them in the exam question, don't even read it again. Tell the examiner, it's adjusting. So let's look at the accounting treatment. As the name suggests, accounting treatment, you have to do what? Adjust. Yes, as the name suggests. Accounting treatment, you have to what? Adjust. So accounting treatment. Accounting treatment is that adjust the financial statement to reflect the transaction and then the event which occurred after the reporting period. That's all. Here, the condition is that the transaction must provide evidence. There must be evidence that this transaction exists before the reporting period or before the end. If there's no evidence, please and please don't put it inside. Now it means that just record, adjust the financial statement means include or record that transaction in the current year financial statement. Why? Because if I draw the normal line again, we have prepared the financial statement in the 3rd December, and the transaction occurred here. So that means that transaction is not in it. It has not been included, so we'll add it. That's the meaning of adjustable. I'm done. Now let me go to the specific examples stated by the IAS 8. IAS 8 gives specific examples of what? Adjusting events. So if you see these examples in any questions, just tell the examiner, you are talking too much. It is what? Adjusting events. So adjust the financial statement. That's all. So examples, specific examples given to us by what? IAS 8. Sorry, IAS 10. The examples are 5. Examples, specific examples are 5 in number. So we'll go through all these examples one after the other. So if you see them anywhere, just that examiner. Oh, this one here, catch you early. Yes, catch the examiner for us. I've seen it. So the specific examples given to us. So take note of that. Example number 1. Settlement after the reporting period of court case. So settlement after the reporting period of court case. Wow. So settlement. Settlement after the reporting period. That's court case. So settlement after the reporting period. After reporting period. So these are right now after reporting period. Settlement after the reporting period of what? Of a court case. Court case. A court case that confirms there's a condition there. So let's take that. So that confirms that the entity had a present obligation at the end of the reporting period. That confirms that. So that's the confirmation, that's the evidence. So from here going, the evidence that confirms that the entity had previously had last year's financial statement, had a present obligation. I like that again. Present obligation. So present obligation at the end of the reporting period. So at the end of the reporting period. So at the end of RP reporting period. That's the first example. The same example is also in the paragraph 16 of IAS 37. The same example in IAS 37. So liability provisions. So the same example in IAS 37. That's the paragraph 16 of IAS 37. So let me do paragraph 16. Okay, so that is it. So that's the first example. First example that we look at for. First example. So it suggests that if we're going to make any payment after the year end, there's an evidence that you have a liability. So that's the contingent liability or the contingent assets that need to be provided for. So that is it. Okay, so that's great. Now let's move on to the specific example 2. So if you see this in any of the illustrations, exams illustration questions, then this what adjusting event. Then adjusting events. Okay. Now let me take this one off and bring the example 2. There are only 5. So after going through the 5 examples, just know them. Example 2. Example 2. Now the example 2. Here we are saying that the receipt